So welcome back to My 5 XYZ, where we talk about 5G communications today. So the usual disclaimer is going to be that I'm not a CFP, not a CPA, and I'm certainly no expert in 5G. In fact, prior to the rollout in 2019 and all the commercials about it, I had no clue what 5G was. I didn't have any clue what 4G was. And so this brings me to kind of another disclaimer that I want you to kind of think a little bit harder about. So when you're on social media, when you're on YouTube, pay close attention to who you're listening to. What is their skill set? What is their background? Why should you even be listening to them? Just because they have a check mark or say that they've been verified, it just means a lot of people are following them. They might have no clue or no background, and you really shouldn't be listening to them. And so what you need to know about me is kind of what are my biases, what are my ulterior motives, and kind of conflicts of interest. So for me, my bias, my ulterior motives, my conflict of interest is I'm trying to build this YouTube channel. So I'm trying to create content that is actually entertaining and engaging, but hopefully educational, because for me, I want to have social impact. I want to build out financial literacy. I want to help people to kind of grow the way they think and try to shape the way that they try to have a relationship with investing. I want them to be engaged. I want them to be active about learning. And so that's kind of my bias about creating all the content on this channel. Not everyone's going to be the same way. And so what you need to know about me and my background is that I have a bachelor's of science of engineering from the University of Michigan in biomedical engineering. So that means I don't have electrical engineering. I don't have a computer science background. I've taken a couple courses, and so I have some peripheral understanding. So it allows me to drill into some topics that are not within my field and still have a basic understanding so I can at least process it from an investing standpoint. I have a medical doctorate from the Michigan State University, and so I'm a doctor. I'm a cataract surgeon, in fact. I've been in private practice for about 5 years. I have not taken any gap years, and throughout that time, I literally have taken no finance courses. I actually started investing in 2012 when I was in residency and have been exclusively a passive investor. And what that means is I try to buy ETFs that track index funds like the S&P 500, sometimes the NASDAQ, and add a couple sector ETFs. And so you've heard me talk about mine like discretionary spending and technology, trying to hopefully outperform the market with a subsection. But I don't actively trade, so I'm not doing a lot of technical analysis. It's only recent that I've learned about Bollinger Bands or the relative strength index, and I don't spend a reasonable amount of time actually looking at fundamentals. So what I mean by that is I'm not pulling apart balance sheets, income statements, cash flow statements. Until recently, I'm kind of going through an NYU playlist, and so I'll leave that in this description. But that's my background. So before you kind of go any further, just kind of know where I'm coming from before you kind of put too much stock into what I'm saying in this presentation. So kind of the goals of this presentation on 5G is just trying to game out what the future is going to look like and how does 5G fit into this. Then we'll talk about what is 5G, okay? What is the expected timeline, and how might I try to invest in 5G if I think it is viable and worthwhile. So first, what is 5G? So it's the next iteration of broadband cellular network. It's just an upgrade from 4G. We've already started to unroll it in 2019. And so the question isn't whether or not 5G is going to be adopted, it's going to be more when it's going to be adopted. So it's the same cellular network structure where geographic areas are covered by what's called a cell, and it's connected to the network by radio waves that kind of go through local antennas. The increased speeds that we get with 5G is actually related to the higher frequency radio waves used. And so it's actually substratified into low band, mid band, and high band. So the low band has about 30 to 250 megabits per second, and its range of coverage is similar and kind of functions like 4G. So essentially you have maybe a slightly faster 4G with the low band 5G. The next category is going to be the mid-band. So the mid-band has about 100 to 900 megabits per second. It's got a range of only about several kilometer radius, and this is what they've rolled out in metropolitan cities. Okay, since it's more densely packed, this is an effective strategy to get 5G to a large number of people. And then high band, from looking at it, it's used in the future. Okay, so I don't think there is going to be a lot of high band being installed right now due to some of the limitations, and we'll get to that in a second, but it has high theoretical speeds, potentially like a gig per second. But the limited range is due to the high frequency band, okay, and the fact that it cannot penetrate through walls and windows. So this is thought to be maybe kind of use applications in, let's say, Times Square, where you have densely packed people in an open environment, or maybe like an NFL stadium or conference centers. Okay, so 5G can support up to about 1 million devices per square kilometer versus 4G, which is about 1/10 of that. So it has the ability to connect a lot of machines, and that's what's getting a lot of people kind of interested in it. But like I said, it's only starting to roll out in 2019. We're going to see continued rollout this year, next year, in the next couple of years. It could be even longer than that, potentially over a 5-year project. So the future of 5G, what you need to know is there are 9 companies involved in making radio hardware and systems for carriers. And so these kind of 9 companies are Altia Star, Cisco Systems, Datang Telecom or Fiber Home, Ericsson, Huawei, Nokia, Qualcomm, Samsung, and ZTE. So what you need to know about this is that there are just kind of 9 companies that you need to focus on from a hardware component, but there are other components to 5G that you also need to pay attention to. And we'll get to that more in the future. But why should you care about investing your money in this? So a couple analysts estimate that 5G technology is actually expected to generate about US dollars of 12.9 to 13.1 trillion in sales activity across multiple industries, and this is going to support about 20 million jobs by 2035. So there's a lot of money to be kind of made in this. There's a lot of money being invested in it. And so it's going to be quite interesting to see how the new infrastructure bill, with its commitment to broadband, and I think it's about $65 billion being spent to kind of bolster our country's broadband infrastructure. I wonder how much of that is actually going to go to kind of 5G, because as we'll get to next, it's going to actually try to replace or at least compete with the general internet service provider. So in the final stages of 5G, the speed, the connectivity is hopefully going to actually rival the general internet service provider for laptops, desktops, as well as kind of connecting various machines. And so you should learn about Internet of Things, okay? It's going to be too much to talk about in this video, but it is something that it is going to be the next rabbit hole that I probably go down. My next video is probably going to be on cybersecurity, but the more I learn about quantum computing, it brought me to cloud and 5G. Now I'm doing 5G, and it's bringing me into the Internet of Things, machine learning. And so there's so many rabbit holes I actually want to go down to, but I digress. While there's a lot of excitement about 5G and the possible applications, there are some concerns. So some of the concerns are going to be warranted. So one of them is that 5G can interfere with our measuring of water vapor. You think this might be trivial, except that if we cannot measure water vapor accurately, this has implications for predicting weather patterns. If we don't know weather patterns, commercial aviation is affected, and that could be potentially dangerous. Other things is security. I can't remember if it was 2020 or 2019 when it happened, but there is a huge kind of hoopla about China and Huawei. We don't want China potentially building the main infrastructure for all our 5G networks, because that is a national security risk. And so that's why there is this concern about this company. There's also a risk with our other partners or allies like South Korea or the European Union. And so there is kind of raising concerns about security. And that's why my next video, again, was kind of going to be about cybersecurity. And then the final one is about public health. There's concerns about radio frequency. There is some misinformation about it somehow spreading COVID-19. I don't quite understand how we got there with this. Not going to talk about it. It can be a polarizing topic, and so I'm just going to skip that. But so I don't know anything about 5G. I don't know where to start. So how do I start investing in it? So the simplest way is to look for an ETF. When I was doing the quantum computing video, I had found Defiance ETFs, and they actually had one on 5G. So I just bookmarked it, saved it, and then when I came to make this video, I started researching it there, and that's where I started. So this was a fund that was incepted in March 4th of 2019. It has an expense ratio of 0.3%, and it has a holdings of about 88 companies. So when I did some research on it, this was a couple days ago, it said that the return for year to date was 22.2% compared to 25.8% with S&P 500. The 1 year was 30.3% compared to 32.8% with the S&P 500. And then the 2 year actually finally outperformed the S&P 500. It was 66% versus 51%. So like you've heard me talk about it before, if I'm going to invest my money, I want it to be able to at least be competitive or better than the S&P 500. If it's going to simply underperform the market, why not just put my money in the market? So that's kind of the first tier that I need to kind of cross into whether or not I want to invest my money and time in researching this further. I think in 2022, I'm going to try to be a little bit more of an active investor, trying to chase down different companies, trying to find ones that I perceive to be undervalued or areas that I think have strategic growth for a year and 5 years from now. And so I'm using the last kind of 5 months that I've done making this YouTube channel, learning about more in terms of technical and fundamental analysis, and hopefully applying it over a whole calendar year to see how I perform compared to the market. So this ETF is focused on tracking the performance of US and global companies that are involved in the development of the 5G and the rollout of 5G networks. So some of the subsector breakdowns within this ETF is going to be radio access network technology, and that's 35.7% of this fund. You have cloud core, which is about 15.86%, mobile network operators, which is 14.6%, network virtualization, which is 10%, and then I thought this fifth one was actually quite interesting. So cell tower and data center REIT. I love real estate. I like real estate investment trusts, and so seeing this within it was actually quite intriguing and made me want to invest in this even more. So the top 5 holdings, so we need to look at are what is this company actually investing in? And so Qualcomm was equal weighted, so all of them were equal percentages. This one is different, and so this one has weighted holdings. So AMD makes up 8.8%, okay? There are ways to kind of see which ETFs this might kind of overlap with, and so I compared it to Qualcomm and Meta, and there's a decent overlap. For Qualcomm, it's 6.3%. This had some overlap with the Meta ETF. Then you have analog devices, 5.62%, had some overlap with Qualcomm. And Keysight Technologies was 4 at 3.6%. Xilinx, or XILINX, was 3.34%. But spoiler, AMD is acquiring them, and it's going to be slated to end or kind of be bought up by the end of the year. There was another one of note, which was Marvell at 2.73%. This was also in the Qualcomm ETF, and it's one I'm actually invested on public. So if you don't know about public, my share link is down below. Actually, I think it's Brendan Chima's, but join the investing community. It's a great place to learn. And that's where I post a lot of kind of my posts, my comments, and the only reason why my YouTube channel has any traction is because of the community there. So I'll always be eternally grateful to them. So when investigating a new ETF, you also want to know whether or not it overlaps with your current ETFs or your current holdings. And so for me, what I did is I went to ETF Research Center and I plugged in kind of my 3 main ones. So they're FCOM, FTech, and F Discretionary. I actually did end up selling off my VT position. So I gave part of it to my donor advised funds for my long term. And for my short term, since I had some tax loss harvesting from GM and Tesla, I ended up just liquidating some short-term gains, and it'll probably end up being a wash in terms of taxes for this year. But I turned that money and I started investing in some of the things from the quantum computing video, the metaverse video, and some of the stuff from this video here. So for F Communications, there's actually a significant amount of overlap between Verizon, AT&T, and T-Mobile. So those are going to be your mobile network operators. So 5G is not giving me much exposure to anything new in that category. But when we look at F technology, NVIDIA and Apple are much higher in F technology, but Qualcomm and AMD are much higher in 5G. So if I didn't want to buy 5G, I would definitely want to focus some effort on looking into AMD and Qualcomm to take individual stock positions in this. Other one was Broadcom, and this was equal. F Discretionary is Amazon, and it's well represented in F Discretionary. And so I don't need any more exposure to Amazon just to kind of simulate 5G. And so the thing I realized when I was doing this is I don't have good exposure to the top 5 holdings within 5G. And so purchasing 5G could be the most effective, time efficient, and quickest way of just getting exposure to 5G without doing any further research. But you know me, you know these videos, I like to do more research, and so we kind of move on to the first company. It's AMD. So on 5G, this was their #1 holding, and so I figured that's a great place to look. So when I looked at AMD's website, their quote is, "Our goal is to build a best-in-class growth company." Pretty simple, but the question becomes, how do they do this? And so they're trying to build high-performance computing, graphics, and visualization technology, and they want to be the building blocks for gaming, immersive platforms, and data centers. So those are some pretty big things. Gaming, immersive platforms, I think of metaverse, and data centers, so like cloud. Okay, so the business focus here is going to be in about 5 pillars. So cloud networks, so they work with Amazon Web Services, Azure with Microsoft, Google Cloud, IBM Cloud. They also produce components for supercomputers. The next one is going to be 5G and communication infrastructure. The third pillar is AI and analytics. The fourth is going to be gaming, simulation, visualization. I just think of this as the metaverse, okay? I think Facebook has done a great job of bringing meta or metaverse to the forefront of everyone's imagination right now. And then the fifth is smarter client devices and edge. So you heard me talk about the Internet of Things or IoT. The other thing you need to start researching about is edge networking. Again, this is going to be too much for me to talk about in this video, but edge networking is going to be, I think, the next frontier of processing data. So if you thought of cloud as kind of the major place that all stuff is processed, and you have all these sensors, all these chips, all these things producing and recording and transmitting data, you have to have a middle thing. So that middle thing is going to be the edge, where it's able to process some things that need real-time kind of decisions being made. So let's say for autonomous driving, you have sensors from a car. It's not going to wait or be useful for autonomous driving to wait for a response from going to the cloud and back. That latency or lag time is important. That could be difference between hitting a car or hitting a pedestrian. And so you need what's called an edge network to process that information and make decisions. And so that edge network is going to be a new place of innovation to not replace the cloud, but to be kind of something that helps streamline, okay? So these two are going to grow together. They're not going to cannibalize each other. One needs the other. And so 5G is just going to be the interconnection between that pathway from sensor to the edge to the cloud. And so that's how I see 5G. But the other thing you need to know is AMD recently acquired Xilinx for $35 billion to close at the end of 2021. So when I was looking at their financials, we're just going to kind of dive into this a little bit. But again, I don't have a lot of background in diving into financials. And so the NYU playlist I left in the description has some very interesting videos. These are this guy's course. He teaches MBAs at NYU, and he's making his course literally available to you for free on YouTube. So for AMD's financials for Q3 in 2021, has a record revenue of $4.3 billion, which is up 54% year over year and 12% quarter over quarter. A gross margin is 48%. Its operating expense was $1.14 billion, with an operating income of $948 million, or a net income of $923 million after taxes. And the operating income divided by revenue is 22% compared to last year, which was 16%. So it means that they're becoming more efficient. For the amount of operating expenses, the amount of profit that they're able to drive is getting higher. And so that's very important to kind of keep track of. You want a business that is kind of investing in infrastructure and a product that will hopefully scale up in terms of profit margins. And that's what I'm seeing here, or at least that's what I think I'm seeing. Cash equivalent, and short-term investments is $3.6 billion, up from $1.8. They got a lot of cash, and so that's going to be important if they want to deploy in certain ways. They have a free cash flow of $764 million, and they repurchased 7 million shares. They seem healthy, but one of the things I had a hard time understanding is kind of what their cohesive vision and goal for the future, which is what brings me to Qualcomm, which I'm actually very excited to talk about. So Qualcomm, or QCOM, is what's something I thought of just mobile only, but watching their Investor Day video, I'm become quite aware that it's more than just mobile. And so that's why I would really encourage you to watch the Investor Day video. I'll leave in the description. But on their website, they say Qualcomm is a global leader in the development and commercialization of foundational technologies and products used in mobile devices and other wireless products. From network equipment to consumer electronic devices, we help billions of people around the world connect, compute, and communicate. So they have 3 strategic components. It's going to be QCT, or Qualcomm CDMA technology. That's going to be the bulk. You have QTL, which is Qualcomm Technology Licensing. So that's their intellectual property that they're licensing out and making revenue off of. And then QSI, Qualcomm Strategic Initiatives. This is where they invest in future kind of areas that they see growing and helping. So to start, QCT kind of is a revenue stream based off of 4 components: handsets, RF front end, automotive, and Internet of Things. So starting off with handsets for mobiles, one of the things that they are trying to go after is the Android phone market, specifically premium Android phones. They say about 85% worldwide phones are sold are Android. And so if they can be the leading supplier of the chip for these premium mobile devices, that is a huge growth market for them. And so one of the things they also did for kind of developing their handset portfolio is purchased Nuvia. So Nuvia is what they purchased to build out their CPU to complement with their existing architecture and network of GPU, AI engine, and DSP. And so that's going to be the handset. To go more into it, you got to watch that video. But the next one is going to be radio frequency front end. So they're actually involved in all three components. So they build modems, RF transceivers, and RF front end. Because they do all three components, they can find ways to make it just more effective. It gives them a competitive advantage to be a player in driving kind of the technology within all three spaces, as well as holistically. And so that is another thing to kind of pay attention to when evaluating different companies. Are they just one component in a larger cog, or are they getting all the kind of whole cogs, the whole machine that they're kind of investing and building in? For automotive, they have what's called the Snapdragon digital chassis, where it kind of focuses on the car to the cloud connectivity, ride platform, auto connectivity between cars, so with autonomous driving, this will become important, and cockpit platform. So we've seen kind of the push towards infotainments, okay? You have these systems on your cars that are getting just more technology driven, and it's great. It's great for the consumer, and it's also great for Qualcomm. And then finally, the Internet of Things. So 5G is a network that's going to connect all these machines. So you have your wearable, your Fitbit, your Apple Watch, your Apple phone, all the different wearables that you have. You have all these different sensors that are collecting information, and it needs to kind of find a way to connect to other things, or actually eventually get back to the cloud, or like I talked about, going to an edge network. And so one of the things that they're trying to do is not only the 5G, but they're trying to figure out how to develop what they call the intelligent edge as a tiered processing between sensors and cloud. And so this is a space that they see as being important in an area of growth. And so they feel that as cloud grows, this kind of intelligent edge or edge networking or network edge or edge computing is going to be important. So QTL, it grants licenses or provides rights to use portions of the intellectual property of their portfolio that is essential to manufacturing, sale, and use of certain wireless products. And so this is a way that their intellectual property, they're making money off of it. And so I can't remember what the relative proportion was, but this was considerably less than the previous one, but still substantial. And they've committed about 20% of their revenue, or the annual revenue, to R&D over the last decade. And so we're starting to see this come to bear fruits in terms of their heavy commitment to investing in R&D. The technology that they have now isn't because what they've come up with in the last year, it's what they've kind of been investing in for the last 2 years, 5 years, decade. Because of that commitment, they've positioned themselves well. And what I mean by positioning themselves well is, honestly, all they have to do is their chips and products that they're doing, everything else seems to be kind of converging on them. And so they're going to enter into the laptop space because honestly, it's going to be more important when you have people remoting from home. If they want to take their laptop, they want to have access to 5G just directly on it. If you have your car and you're doing autonomous driving, if you're going to have smart industrial complexes that are going to do manufacturing, but you don't want all those cables to it. All this is going to be dependent on a lot of the 5G technology, connectivity, cloud data for processing and holding data and data storage. And so they have built a product that all these other niches are going to be kind of relying upon, from your smartphone to your smart home to hopefully your smart car in the future. They're well positioned. They don't have to necessarily reinvent the wheel. They might just have to repackage it or streamline it for a certain industry. And so that's going to be something that is awesome for Qualcomm in terms of scaling up profit. So they get to go into a bunch of different sectors and do well without having to reinvent technology for each sector, because all of them are kind of converging on this kind of product that they're building and developing. QSI is the last one, and they say that it's responsible for strategic investments, and they specifically notated AI, automotive, digital healthcare, enterprise, Internet of Things, mobile, and networking. For their financials, their revenue is $33.5 billion, up 55% from $21.7 billion. Operating income is $11.8 billion, okay? And that was up from $5.9 billion, quite a big jump. Their operating margin was down to 23% from 34%. So they're becoming far more efficient making money. So their operating expenses are hopefully going down or maintaining while their revenue is going up. And that's what I meant by they're able to scale up. So you have a bunch of different industries and markets that they have available to go into without having to reinvent R&D. So their earnings per share is $8.54, up 104% from $4.19. Its handset is their bread and butter. But the other three components that we talked about, they wanted to kind of make note that radio frequency front end is up 76%. So they made revenue of $4.2 billion, up from 2.4. Their automotive is up 51%, $0.97 billion from 0.64. And then Internet of Things, 67%, $5.1 billion, up from $3 billion. And so not only are they making money off of handsets, but they're having real revenue in three other areas. So they have a huge amount of capital return to their shareholders as well in the last 2 years, but I won't really go into that. So moving on, we're going to go to ADI, or analog device. This is a purely semiconductor company. And a semiconductor is important because it is the technology that makes your phone run, your laptop run. It makes tech smaller, faster, and more reliable. And so for ADI, what they say on their website is that ADI operates at the center of the modern digital economy, converting real-world phenomena into actionable insight with its comprehensive suite of analog and mixed signal, power management, radio frequency, and digital and sensor technologies. So ADI serves 125,000 customers worldwide with more than 75,000 products in the industrial, communications, automotive, and consumer markets. So when you look at those four markets, consumer makes up about 15%, communication infrastructure about 16%, automotive 20%, and industrial 49%. So when I was looking around, honestly, I didn't have a good chance to look at an Investor Day video, or maybe they don't have one. I think I looked for it, but I couldn't find it. And so I just went straight to their financials. So for fiscal year 21, they had a revenue of $7.3 billion, up from $5.6 in 2020, which sounds good. But when you're kind of looking at their financial statements, the cost of sales increased and the cost of operating expense increased. And so those are warning signs, okay? It is becoming more expensive for them to do the same business, essentially. So another thing of note is that they acquired Maxim Integrated Products in this year, and so they'll come out a little bit later. But their net income was $1.39 billion compared to $1.22 billion in 2020. And so that's what I was getting at. Their revenue might be up about $2 billion, but their profit margin only went up a little bit from 1.39 compared to the previous year, 1.22. They measured their non-GAAP gross making to be about 71%, the operating margin greater than 42%, and free cash flow of $2.4 billion. So these non-GAAP measures are, they think, a little bit more accurate because the acquisition of Maxim Integrated Products, I think, was throwing off some of those numbers, especially for their most recent quarter. Their balance sheet had a notable red flag to me. I am new, again, to balance sheets, so whether or not this is truly a bad thing remains up to you and your own kind of homework and due diligence. But the goodwill was the largest figure as their asset. Their second largest one was intangible assets. And so this was found on their condensed consolidated balance sheets. But my question is, why are their two largest holdings in terms of assets considered to be goodwill and intangible assets? What exactly does that mean? I didn't get a chance to find out really what they qualify as goodwill or these intangible assets to better kind of understand or evaluate whether or not this should be a red flag or not. But it was a flag to say I should dig a little deeper before maybe investing my money in this company. So it seems to me like they're making money, but the cost to make that money is also kind of going up, and so their margins are getting smaller. It's difficult to say how much of this was maybe affected by the Maxim Integrated Products, and so this might be one where I might not jump in head first, although I already bought a little bit. I might just continue to watch this company and see how it performs and see what their kind of financial statements next year looks like before maybe going full tilt. Instead, I might just get my exposure through the 5G. So up last is Marvell. Marvell is something that I had invested in public. I had seen it again in QTUM or Quantum. And so when I saw it again here for 5G, I decided to pick this as one I wanted to investigate further. I didn't get to watch their whole investor day because it's on Vimeo and I can't do double speed, and listening into real time is just like watching paint dry to me. And so I watched the first part, and honestly, I'm intrigued by them. I think it is so important to watch these Investor Day videos for the simple fact that if this cannot convince you as an investor to see what their strategic vision is, to be inspired by them, how are they going to inspire their workforce? How are they going to inspire the people at that company? If they can't articulate a vision of what the future is going to look like, how can they get their kind of employees to align and kind of set a vision and go forward and execute? If they can't do that on this video, which is pretty important, then they're not maybe the best company to kind of invest your money in. The other thing is simply, if they cannot sell a vision, how are they going to sell that to their consumer that's trying to purchase their product? And so that's why I think Investor Day videos are helpful. That to me is what personally got me to invest in Roblox, okay? Got me excited about IBM with quantum computing, and now it's getting me excited for Marvell. And so watch these videos, they're helpful. It gives you a little bit more kind of data on the intangibles when you're comparing kind of different companies. It's more than just book sheets and financial statements. So on Marvell, their website, they say, we leverage our unrivaled portfolio of data infrastructure, semiconductor technology to identify the best solutions for your unique needs. And we sit shoulder to shoulder with your teams to build it. Agile in our thinking and our partnerships, we look for unexpected connections that deliver a competitive edge and reveal new opportunities. At Marvell, we're driven by the belief that how we do things matter just as much as what we do. And so what you need to know about them is they're a company that provides data infrastructure and semiconductor solutions. Their specific focuses are going to be on cloud computing, 5G, automotive, and borderless enterprise. I think borderless enterprise is just a fancy way of saying reimagining the new workplace. In terms of this, they believe in the importance of customization and optimization of silicon. So this is just a fancy way of saying that instead of trying to build kind of the technology or infrastructure for cloud computing as just general purpose, they want to build one that's specifically tailored to the needs of their specific client. So if you think of each cloud category as being fundamentally different, having different needs, different demands, and there are different ways to structure your infrastructure to get the most out of your system to make it run more operationally efficient, then this is important. And so if you're thinking about kind of design efficiency for search with, let's say, Google versus e-commerce, enterprise solutions, or even social media, let's say like Twitter, your demands are going to be different. So you think that the capabilities of your cloud should be tailored to what you actually needed to do. And that's where Marvell comes in. So what I'd say is it's a big company. It is continuously reinventing itself. And one of the things that was kind of interesting to learn was initially they had gone from more consumer side of things where that made up a majority of the revenue. And they essentially kind of rebranded themselves and pivoted to make a renowned commitment towards building infrastructure. And so they made strategic acquisitions and divestitures to kind of focus on their main mission or goal or core, whatever you want to call it. And they decided to focus on building out the infrastructure because they felt that the life cycle for these products is going to be much longer. And so it'd be more strategic, more efficient, better revenue, more stability to kind of focus their company on building out those solutions. And so their biggest end market is going to be their data centers, and they have had about 24% growth within that. Automotive, though, is going to be their fastest growing at 28%. And this also does include industrial within that component. Carrier, which is 5G, is why I started looking at them for this video. And it's honestly a lot smaller in terms of the revenue. And they have about 2% growth with that expect. So when I look at this company, I see them as building a pipeline. And what I mean by that is I don't want to invest in just a company that's going to make revenues for the now and then stagnate. I want to make sure that they have something in the pipeline for midterm and long term. So the way I look at it, the near term is going to be data center. It's cloud. That's where a lot of the money is. Cloud was a big deal before 5G. So cloud revenue is more robust. It's been around for a lot of time. And so that's why we're seeing still that there's a big market right now for everyone pushing towards moving towards cloud systems. And so that data center is creating lots of revenue for the now. Other things, though, is kind of how you saw automotive is growing for them. So automotive and industrial is going to be, I think, the next sector that's going to be for the midterm, that's going to be growing. So if you think about kind of the pie, one of the things that's really exciting about investing in a company like this, or let's say Qualcomm, is their pie is growing at a huge rate. So their total area market is going to be massive. But like you see all these Rivian, you see these huge Sono, all these pushes like Tesla into kind of smart cars. It's really exciting. There's lots of money to be made, but those smart cars are going to need chips, okay? And so not only is it going to be growing because of the auto industry, but it's going to be growing because so many more things are becoming more connected. And so the pie is honestly limited when you compare the two. So the pie for automotive is going to be the number of people that can buy cars. That's going to be the maximum. Whereas you're going to see data center, it's going to be exploding, it's going to be growing, it's not going to be constrained to the number of people. And so that's why I think these companies are actually quite exciting. And so they've made me want to invest my money, but let's go a little bit further into kind of what the overarching themes of this. Okay, so Marvell actually has their quarterly or their financials supposed to be reported on December 2nd, 2021. So I decided not to include that in this video and just going to wait to investigate their financials at that point in time. But again, a company is more than just its financial statements. You want to see who's running these companies. Are they dynamic? Do they have a good vision? Because that also matters. That's going to be more the qualitative aspect of fundamental analysis. So in conclusion, okay, when investing in tech, you should always be fearful that you're potentially investing in the next tech bubble, okay? I don't want to see your hard-earned money go up in smoke. I don't want my hard-earned money to go into smoke. And so that's why I think these semiconductor companies are actually very intriguing, because they're building out important infrastructure. They're building out the infrastructure for cloud and 5G. These are rolling out, these are happening, these are needed. This is a product that has a demand. This is going to last, okay? With the tech bubble, you had all these kind of internet, e-commerce things that didn't really necessarily have a cohesive kind of product that they were selling. And so it's not surprising that some of these kind of went belly up. But for these companies that I've looked at, I think that their market isn't going to suddenly evaporate. 5G started rolling out in 2019, but this is just the beginning, okay? So the rollout is ongoing. So for the next 2020 or 2022, 2023, next 1 to 2 years, there's going to be, I think, some exciting growth within 5G. But again, that's not even going to be the final step. From looking at the Qualcomm Investor Day, it's just painting a picture where this is going to be a gradual rollout. And we don't just see it as kind of all of a sudden exploding kind of in the next 2 years and then dipping off. This is going to be hopefully a gradual increase, and then it's going to be reimagined in terms of how it's actually used and applied when we connect all these machines. The third thing is going to be kind of total available market. I kind of touched on this with Marvell already, but it's likely to grow rapidly with cloud, with 5G, connecting auto and industrial, with the metaverse. These kind of total available market is huge, okay? It isn't going to be constrained by the number of people that are kind of buying cars or the number of people that are going to be buying one-off things like phones. This is going to have their hands in everything. So for each person, there are going to be multiple things or devices that are going to have these chips. And so the market is huge. And that's why I'm trying to learn more about it so I can see where I can strategically put my money. These, again, not buy or sell recommendations. This is just me doing my homework and sharing the results with you, trying to figure out whether or not this is a good place to invest, whether or not this is going to be the future that we end up living in 5 years from now. But hopefully this video ages well. And when I look back at it a year from now, 2 years from now, hopefully I'll have good returns in my portfolio. But thanks for listening again. Leave comments. Don't forget to like, subscribe, hit the alert button so you know when the next video is coming out. But I think the next one's going to be on cybersecurity. Hopefully you enjoyed this one. Don't forget to check out the other ones like the metaverse and quantum computing. But have a good day.